Okay, so what we're going to be covering in this chapter are the different types of traders that there are. Now, what I mean by this is in terms of how long people hold their positions for. Now, when I say hold a position, they might buy, let's say, oil, okay, and hold that let's say that buy was at $70. They might be looking for a target of $100. So for something like that, where it's such a big movement, okay, nearly 50% movement, it's potentially going to take quite some time for that trade to actually come to fruition if we're correct. And those type of traders are called long-term traders. So they tend to hold their positions for anywhere between 6 months and say 5 years. We then have our medium-term traders. These traders would like to hold positions from somewhere, say, a month to about 6 months. Okay, we then have short-term traders, and this is kind of more what we focus on here at the trading field, holding positions for a couple of days to perhaps a month. And then we have the intraday traders. Again, we do kind of fit in this band in terms of holding positions for anywhere from a couple of hours to a few days. So there's absolutely nothing wrong with being a long-term trader or a short-term trader or a medium-term trader. It depends on your lifestyle, okay, your schedules, how busy you are, if you're full-time working at the same time. But also in terms of things like investment portfolios. So in the UK, you have your ISA portfolio. So you can actually use the skill set that we teach in this course to be able to actually analyze those markets, analyze the stocks and shares, looking at monthly and weekly charts, only having to review these trades on perhaps every 2 or 3 months. And your returns in that portfolio will 100% be increased compared to the savings accounts that perhaps you were looking at, where you're getting no more than about 2%. Okay, so absolutely you can adapt the skills that we teach in this course to a long-term investment portfolio. But the reason we focus on short-term and intraday trading, and it's also known as swing trading, is because it can pay us an income on a daily, a weekly, or even a monthly basis. Okay, and that's what we need being a full-time trader, because we need to make sure that we're being paid for what we're doing and as regularly as possible. Now, the difference is the fact that, first of all, you have to be available to be able to look and just check the charts every few hours, okay, see how the trades are doing, see if there's any new setups, any new opportunities to buy or sell a market. But again, this can be done from anywhere. Nowadays, you have apps on your phone where you can check your charts, so you don't even have to pull up your laptop to do so. What we personally recommend is actually doing a full bit of analysis, perhaps on a Sunday night before the market opens, and then throughout the week, you're just going to be reviewing the movements of the chart and actually looking for those opportunities to buy and sell. So once you've learned the course and you've run through the whole thing, and eventually you start putting the technical analysis skills into practice, you'll end up developing your own strategy, okay, and your own rules that you'll want to follow. And then when you go to look at the charts, you'll just be scanning, okay, just literally just a quick scan of the charts just to see if anything has appeared. Now, again, depending on your lifestyle, depending on your schedules, you can be any kind of trader in terms of long-term, short-term, intraday. Okay, but the main method that we'll teach in here will be the intraday and short-term methods, simply because we all want to be paid. Okay, we all want to take a position, let's say on GBP USD, we go long. Okay, we take 60 pips out of that market. We might have done 10 pips on that, £10 a pip on that. Okay, and that'll be £600. And if that takes a couple of hours, we've made £600 in that day. Okay, so that's why we focus on the short term, because it means that we can make money on a regular, very short-term basis. And obviously then that will help us moving forward to continue to grow that account.